Alibaba is expected to report results this Thursday, and many of you are looking to this channel for the first look and subsequent analysis that I do on the company. And you know that I'm going to be all over it. But what I wanted to point out is that a lot of you are new to the channel. Of the 6,000 subscribers that we have, 5,000 of you came in the last 3 months. So you may have missed a video series that I consider to be the greatest overhang on the Chinese economy, which is the real estate sector slowdown, led of course by troubles at Evergrande Corporation. I really don't think you should be investing in China without understanding this issue and the potential fallout. So without further ado, here's part 1 of the series where I investigate if Evergrande will collapse. A lot of investors are worried about the pervasive economy-wide impacts of a potential Evergrande default. For that reason, they're avoiding Chinese stocks like Alibaba, Tencent, JD.com, and Baidu to the point where they all could potentially be very undervalued. Is there something to this that we should be aware of? That's exactly what we're going to dive into in this video. You're watching More Money. Let's get it. In order to really understand what's going on with the Evergrande situation, we have to understand how we got here. And just a little disclaimer, this isn't a comprehensive analysis, it's largely just an overview. I am not a Chinese property market or economy expert by any means. So you may or may not be aware, but the average price for a residential home in China, typically an apartment, more than quadrupled between 2001 and 2019. Compare that with the average price for a new home in the US, which rose by only 80% in that same time period. So that begs the question, why is it that the Chinese real estate market has increased so much more than the US? Part of the problem is that China really does not have property tax. So armed with the belief that home prices can only go up, Chinese real estate speculators are participating in the mania by purchasing multiple homes so long as they can get a mortgage. And it's not like we didn't see similar behavior in the US just before the housing market crashed back in 2008, 2009. And speculation has been driving the Chinese housing market so much that in 2016, Beijing began to promote a slogan that houses are for living and not for speculating. Despite that, home prices have continued to surge. Now, one thing that has been really pushing the Chinese real estate market is the ability for the Chinese developers to gain access to debt. So in August of 2020, Chinese authorities met with 12 real estate developers and asked them to reduce their reliance on debt. Evergrande was amongst those at the meeting, according to Chinese state media. Now, in those meetings, the Chinese authorities outlined 3 red lines that cannot be crossed. But note that this isn't a policy that has been officially announced. So what exactly are those 3 red lines? The first one is a liability to asset ratio. It must be less than 70%. The second one is a net gearing ratio of less than 100%. What is a net gearing ratio? It's basically just net debt divided by net debt plus total equity. You can't have negative equity, essentially is what they're saying. And the third red line is that the cash to short-term debt ratio must be more than 1 times. You should be able to pay your short-term liabilities. Now, at the time of the meeting, all 12 of the developers had crossed at least one of those red lines, said Julian Evans Pritchard, senior China economist at Capital Economics. 1 year later, Evergrande and Greenland were the only companies of the original dozen that had still crossed at least one of those red lines. Greenland had crossed 1, while Evergrande had breached all 3. Now, this all sounds great and it looks like we are on the right track to recovery, except I don't think it's that easy. To explain my point, let's go back to the first of those 3 red lines. The liability to asset ratio assumes that the assets are appropriately valued, right? So we're really peeling back that onion to really dig into the issue here. In order to see the problem, we have to look at Evergrande's real estate development strategy, which is insanely aggressive as I understand it. They will sell debt to purchase the right to develop a piece of land because in China, you can't own the land, only lease it. They will then pre-sell homes on that land. Now, here's the fatal step. You would think that they would pay down the debt that they took out to get the land rights once they pre-sold the homes on that land, and then put the remaining cash towards expected building costs to deliver the homes, and maybe to cover the administrative costs and even give management bonuses for a job well done. Well, they decided to also drink the Kool-Aid that home values and thus land lease values will only go up. So why not use as much of the cash from the pre-sales as possible, combined with new debt, to buy more land leases, to pre-sell more homes, and on the cycle grows. And the way that they can get more debt from lenders is by stating that the unfinished homes have value because the land rights are valuable, all while ignoring the fact that they are not pre-selling 100% of the homes on those previously purchased land leases. So if there's ever a market decline, they could be stuck with overpriced inventory and potentially unfinished properties. And that's exactly the case with Evergrande, as you can see from this chart, that by 2020, Evergrande had 1.26 trillion won, or US $200 billion of properties under development.
development. And the scary part isn't the properties under development. The scary part is this chart where they have approximately 148 billion won, or US $24 million of completed projects that they cannot sell, and the number of completed projects that are being offered for sale are just growing. They also have mounting short-term liabilities, so the need for generating cash flow is important to stay solvent. So what can you do if you are Evergrande in this situation? You can discount the completed homes to liquidate them and use the generated cash to pay off those short-term liabilities to remain solvent. This should bring down that liability to asset ratio, shouldn't it? Well, not so fast, and here's where I'm going to drive my point home. Because by potentially discounting their home inventory, what they would inadvertently do is lower the price of the properties under development. Therefore, they have a potential impairment of the asset they have on their balance sheet, which they're using to get debt. This is especially a big issue for Evergrande because the value of the properties under development make up over half of the assets on their balance sheet. So if the asset declines in value and the liability remains the same, you've actually increased your liability to asset ratio and pushed yourself over to a debt default. Now, add in the fact that potential buyers understand what's going on with Evergrande's increasing short-term liabilities, and instead of buying homes now, they wait to get a better and better deal, as they know Evergrande will be forced to discount not only their finished homes but also future pre-sales. You can see how a liquidation here could trigger a real estate market catastrophe, and the story only gets worse from here. Evergrande has pre-sold more than 1 million apartments that remain unfinished, and these properties lie in smaller Chinese cities where economists say there is an oversupply of housing compared to China's largest cities where there's a housing shortage. Property construction in smaller cities has run well ahead of demand for years, and it's not like this construction is chasing future population growth, as China's overall population is expected to start declining in the second half of this decade. So what was fueling all of this? Well, simply it's a mania or a bubble. The market has been dependent on speculators and investors that believe housing prices will only ever go up, which led to about 21% of homes in urban China being vacant in 2017, which equated to approximately 65 million empty units according to data from the China Household Finance Survey. So here's where we're at, guys. We have a huge oversupply of homes in rural China by approximately 65 million units, and Evergrande has to build 1 million more units, all while sitting on a ton of homes that can't be sold, and they're also sitting on a large amount of land leases which they bought using the debt, and they have to somehow convince future buyers that it's a good idea to fork over their life savings to buy a new apartment, which by any estimate does not seem to be a good idea by home purchasers, because Evergrande's cash crunch has caused them to stop paying some Chinese businesses that were assisting them in the development of pre-sold properties. This would include makers of paint, cable, concrete, elevators, and construction companies. Lawsuits involving commercial bills, which is a form of IOU amongst Chinese businesses, have been filed against Evergrande. So construction at many of the sites has been suspended, and if those units aren't completed, many of the households could suffer painful losses. And let's wrap it up with this big conclusion that should scare the hell out of you. The bigger and more pervasive issue is that if these 1 million homes where construction has been halted are not completed, then absolutely no one will be participating in future pre-sales for homes, which effectively impairs the asset value of the associated pre-purchase land leases that Evergrande has on their balance sheet, which was purchased using debt. In this case, guys, it's game over. Evergrande is insolvent and the property market bubble will likely pop. Are you scared yet? Personally, I don't believe that the Chinese government will allow this to happen, but it's unfathomable for me to believe that this Evergrande situation can be solved without some form of government intervention or takeover. So as much as the Chinese government says that Evergrande is not too big to fail, I believe that they will intervene. But what exactly can the government do here to stop the collapse of a real estate market with 65 million uninhabited homes? Well, in part 2 of this 4-part series, I'll go over what the Chinese government has done so far to address the Evergrande situation and what they're signaling to do in the future. Once that video is released, the link will show up right here. Until then, check out this video where famous value investor Manish Pabrai has largely dumped his Chinese exposure in Alibaba. I speculate why he made such a move. If you're new to the channel, I really hope I earned your subscription today. And of course, guys, please don't forget to smash that like button. It really helps YouTube know that this channel provides valuable content, and I'll see you later.